Leon, I mean, let's look at those inflation numbers changing at a much lower pace last month. Your overall view of those?
Well, I mean, firstly, the drop was expected. We'd had previous indications from both the IMF and the central bank, that when they do come up with a new methodology, the inflation rate would approximately halve. Mm-hmm. What we've actually seen is a more than halving of the rate. So the magnitude of the drop is not exactly what we'd been led to believe the impact would be. I mean, essentially what it is the new methodology basically has a way of reducing the importance of outliers. Yeah. And obviously there must have been lots of single items that they were polling which had very high percentage changes. And now the weight of those items has been reduced. Yeah. And this is a great move because it's bringing inflation in Kenya back into line with global norms.
Leon, there is still a lot of skepticism around the collation of this data. I was reading reports that said, it's likely to spark a lot of controversy over the veracity of Kenya's economic data. Do you think it's going to be an uphill task actually convincing consumers that the data is reflective of reality on the ground?
Well, we knew, for the last few years, irrespective of the remarks made by the Statistical Bureau that they were intending to, even prior to that, we knew that there were problems with the inflation data, right? The issue now is that when we look at the inflation data now, where Kenya used to sit with inflation rate well above its regional partners, it is now sitting with inflation rate well below. We're talking about 6.6% in Kenya. Mm-hmm. We've got 12% in Tanzania, 13% in Uganda. This is a headline inflation. Yeah. Food inflation has dropped down to 9.25%, right? Which in Tanzania is sitting at 17%, and Uganda and 26%.
So do you see a reversal now, given that that's the context and that's the comparative playing field that we're looking at this stage, where, in the past, Kenya looked at inflation as the biggest obstacle to actually attracting, any investment its way. Do you see this improving its competitive advantage in that way?
Well, I don't know. Yeah, it's going to take a while because I haven't yet been able to find the actual press release that the Statistics Office put out on this. So it's very difficult to work. We're just simply working on newspaper headlines. But we're going to have to sit down and work. What comfort does the market get from the new inflation data? Look, I mean, we knew that the old numbers were wrong. They were always 20%. That was exceptionally high, but to drop down to 6%, we're going to have to get comfortable with that, and to gain confidence in it. So, at the end of the day, the data in Kenya, as with many countries, with many less developed countries, it's challenging to sample data. You don't have the money to have a big statistics office that goes out and does samples big portions of the economy. It's a fact of reality.
Well, let's bring Samuel into the discussion here. I mean, Samuel, obviously we've looked at this case and it's said to be a positive thing for investors. Favorable inflation data is expected to ease the pressure on fund managers running pension funds and other collective investment vehicles as well. How do you see the market reacting to those inflation numbers that were released yesterday?
Well, it's definitely a good thing. I think we also hope that these sort of numbers are going to spur the investment side of things. What I feel is that we've seen a lot of infrastructure being done, and sometimes you'll find that the fact that people can move easily and they're getting access to so many other services is making things cheaper on the ground. So there is an extent to which these figures are actually reflecting the ease of life that is being brought about by these infrastructure changes. I also think that the market will react. We hope that the fact that people are starting to borrow more will also see that there'll be more investment within the country, which means that we are actually looking at a growth phase as we go forward.
Well, certainly good news for investors, but looking at these inflation figures, some were saying that it's possibly going to lessen the bargaining strength of workers' unions who've been pegging for annual pay negotiations with the management, or under the prevailing rate of inflation that we had been seeing. Let's move on to other market news here. I mean, Safaricom out with numbers early this morning, and from what I've been able to get a hold of, pre-tax profit nudged up 1.7%. We've had revenue increase to 40.6 billion shillings. What have you made of those numbers, and how do you see the market reacting to those figures as we progress through the trading session today?
Well, I think what was very interesting was that M-Pesa has actually shown huge growth. I think it was a 48% growth, a 90-something percent growth actually. And I think that is a good thing in that we are seeing a lot of the subscribers of Safaricom are also using M-Pesa, which is a very good thing for Safaricom in that this is actually increasing their revenues exponentially. I think at the end of the day, with Safaricom being the leader in the market and with all investors, I think the market has been looking at Safaricom since they listed, seeing that it was the one that spurred the bearish period, and it is the biggest listed company. The good figures are actually going to help it on the market, and this will also help their market as a whole.
Well, looking at those figures, I mean, strong M-Pesa service with 7.99 million registered users, up 93% from 4.17 million users in the prior period. But if we look at subscriber numbers, it grew to 14.5 million, but 77% of market share. That's down from the 81% it boasted last year. Is that a concern for you at all moving forward, Samuel?
There is increased competition, of course, seeing that there is more players in the market with you coming in, and of course Zain is still in there fighting. But the thing is, they are getting more from their subscriber in that they're being able to at least, because you might have a huge subscriber base who are not really using the systems, and so I think what is happening is that Safaricom is concentrating more on how much they're getting per subscriber in terms of how much they can actually earn from the active subscribers. So I don't think there's anything to really worry about at the moment.
Well, Leon, certainly many seem to be very optimistic about the way forward for Safaricom. Looking at the company's first bond tranche, it was 50% oversubscribed, and this despite the fact that it had set a minimum subscription at 1 million shillings. And many at that stage had been thinking that it would present somewhat of a deterrent. Do you think there's a distinction to be made between foreign and local participation that we saw in that bond subscription?
Well, those results tend to only come out, at a later stage, and we saw with the Kenyan bond, but of course it's a completely different, credit, where the foreign subscription was in fact very poor, even though it come from a very wide geographic base, but it was primarily Kenyans living abroad that had put money in. Safaricom, I would not be surprised to have seen some form of international investor interest in the bond. I'm really looking forward to see the detail of when those results are released.